a sector which is going to be clearly in focus today, and that's IT, of course. Manik Taneja, the Executive Director from Axis Capital, who looks at the IT sector very closely, is joining us on the show. Manik, hi, good to be speaking with you. We have seen the kind of moves ADR is suggesting on Wipro, the kind of moves we saw on Friday on the likes of Infosys, etc. Do you really see that the Q3 numbers warrant such kind of move?
So first of all, thank you for having me on the show. The what seems to have happened is that companies have reported in line to a beat to the modest expectations, and that is driving the positive reaction to these stock prices. In addition to that, the investor feedback essentially has been that the sector has underperformed significantly compared to the benchmarks, and there is some amount of catch up happening with regards to the underperformance. From a standalone earnings standpoint, I would say earnings print continues to be mixed. At least internal seem to be mixed. While companies hoping for a better calendar year slash FY24, which to some extent is there in the analyst expectations, and thereby, at least from an earnings standpoint, I don't see an upgrade in the sector.
All right, fair enough. Let's also get in a sense from you then as to what the outlook is going forward. Going into the coming quarters, are you hopeful that we will see continued recovery within the IT space? Will it be very selective, or do you think across the board?
So if you think about each of these companies through the course of last 12 to 18 months, growth rates have kept on moderating. In fact, just a point in case or a case in point, Wipro has basically been seeing a sequential decline in revenues for each of the last 4 quarters. And going by what they are guiding for the March 24 quarter, will probably at best be flat revenue performance for Wipro. Now, in terms of whether things certainly improve or not, I would say uh, analysts and the street essentially continue to build in some kind of improvement going into calendar 24 and FY25. So if a Wipro essentially from a full year standpoint is declining by close to about 4% in FY24, the expectations for FY25 are about 4 to 5% growth. Thereby, uh, thereby there is certainly an expectation that companies do, at least from a rate of change standpoint, companies do well. The question that investors need to answer essentially is that are valuations already factoring in this kind of a rate of change?
Fair enough. Yeah, that's the big question that one needs to ask. But just before we let you go, Manik, what are your top bets within the sector?
So I'll be honest, with the exception of Tech Mahindra, which is rated positive at here at Axis Capital, we have reduced or sell ratings across the tier one coverage universe and even amongst the tier two companies. It's KPIT and First Source which are positive rated for us with sell slash reduce across most of the tier two universe.
Okay, good to have you on board. Thank you so much for taking time out and giving us your perspective.